All rise.
Thank you. You may be seated. Welcome back to day two. I do want to start with yesterday. We started talking over each other a little bit, so let's practice a little more decorum today. If the counselors will kind of let the witness speak and don't talk over one another.
Yes, sir. Thank you.
Mr. Chairman, our first witness, Joe Christian, was not in the
Hold on.
courtroom.
Oh, excuse me. Hold on. I know I'm informed that we have witnesses that were not sworn in yesterday.
That's what I was
If
about
we
to
can,
say.
any witness from either party that was not sworn in yesterday. Madam Clerk, will you swear them in? Thank you. I think we're down to Mr. Christian.
That's correct.
Okay. Thank you, Mr.
Mr. Christian, would you state your name and by whom you were employed?
My name is Joe Christian, and I'm currently just an independent economic consultant.
We had one witness who pre-filed testimony in this case that could not be here. Who was that?
Dan Mazier.
And are you adopting his testimony as well as your own?
Yes, I am.
If I ask you the questions in your pre-file direct and rebuttal testimony and in his, would your answers be the same here under oath?
Yes, they would.
Do you have a brief summary you could give the commission of the two testimonies, direct and rebuttal?
Yes, I do. And I'm available to answer any questions you have regarding the use of the company's actual capital structure to establish rates in this proceeding, as well as the cash working capital study, which has been performed in compliance with Mississippi statutes. And for clarity, as we just noted, I'm sponsoring the direct and rebuttal testimony in this case. I'm also adopting the direct and rebuttal testimony filed by company witness Dan Mazier. So any questions you may have regarding Mr. Mazier's direct or rebuttal, please direct those to me as well. In this case, the company is asking the commission to use Atmos Energy's actual capital structure as of June 30th, 2025 to establish rates in this proceeding and to use the actual capital structure in future stable rate adjustment filings. Use of the Atmos Energy's actual capital structure sets rates and complies with case law established by the Mississippi Supreme Court and the commission's stated policy goal of supporting higher credit ratings for utilities through formula rate plans. The use of actual capital structure also reflects how Atmos Energy finances the investment made in natural gas distribution systems and manages its balance sheet. And, as can be seen in my rebuttal testimony in Exhibit 2, the company's requested capital structure falls within the range of common equity ratios authorized by commission since the beginning of 2023, which is a range of 39.59 to 60.61. The facts make clear, and there is no support for the use of a hypothetical capital structure, especially in light of the fact, which staff admits, would diminish Atmos Energy's credit quality. There should be no dispute, as Ms. Collins and other company witnesses have explained, that financial flexibility and the access to competitive capital markets on reasonable terms are essential to Atmos Energy's ability to continue to invest in its Mississippi distribution system. This can only be achieved by adopting the company's actual capital structure to establish rates in this case and in future annual stable rate filings. With regard to cash working capital, it's important for the commission to understand that staff witness Systems has selectively excluded cost of service items that are part of the customer bill, and that this results in only a portion of the revenue lag being accounted for in his cash working capital results. I also want to make clear that the company is not proposing to incorporate the cash working capital study methodology approved in this case or the factors produced in future stable rate filings. Rather, the company's performed this analysis because it's required as a general part of rate case filings. The company will continue to use its existing methodology in its stable rate adjustments in the future. I'm available to answer any questions you have regarding these issues.
Thank you, Mr. Christian. I'd like to take a minute to welcome our commissioner back. Good to have you. Glad you're with us. Thank you.
We tender Mr. Christian at this time.
Okay. Mr. Jones, you recognize.
Thank you, sir.
Thank you.
Good morning, Mr. Christian.
Good morning.
I've got a few questions on a level about how customer rates are determined and how capital structure plays into that, okay? Is it correct that a regulated utility like Atmos has a rate base, which is essentially the assets on which you're allowed to make a return?
Yes, I agree.
Okay. And would you also agree that the company has a capital structure, which presently is about 60% equity and about 40% debt?
That is correct.
Okay. And with respect to the equity portion, this proceeding will determine whether the ROE, or return on equity, that you're allowed an opportunity to earn on. Is that correct?
That is correct.
All right. And in determining the rates paid by customers, the amount of equity rate base is multiplied by the ROE, and that's a significant component of the revenue requirement. Would you agree?
It is a component of the revenue requirement.
Okay. And for the debt portion, there's a specific interest rate that is paid on each series of debt that you issue. And together, all those debt issues have an overall average interest cost. Is that correct?
Yes, we use the average embedded cost of long-term debt in the
Okay,
calculation.
thank you, sir. And the revenue requirement paid by customers also includes the amount of debt rate base multiplied by the average cost of debt after giving effect to the tax deductibility of interest. Is that correct?
Could you restate the question now?
I will. And, the revenue requirement paid by customers also includes the amount of debt rate base multiplied by the average cost of debt after giving effect to the tax deductibility of interest. Is that correct?
Well, we take the rate base and we multiply it by the rate of return to calculate the impact of the capitalization in the formula.
Yes, sir. So would you agree that the rates paid by Atmos customers are directly dependent upon the capital structure, the allowed return on equity, and the average cost of debt?
Yes, those are all components of our cost of service calculation.
And those three items combine to produce what we know as weighted average cost of capital. Is that correct, or WACC?
Yes.
Okay. And would you agree that Atmos's customers' pay is directly dependent upon the WACC? The rates they pay?
That is, again, a component of the cost of service model.
Okay. And do you agree that all else being equal, having a lower weighted average cost of capital is beneficial for ratepayers because it results in lower rates?
If you're only considering the short-term impact, then I would agree with that.
Okay. I'm only talking about the total average WACC that's included in rates and all else being equal. Would you agree that the lower the WACC is more beneficial to ratepayers than a higher WACC?
I guess the context of this case, I
Yes, sir.
believe that when you balance the short term versus the long term, the capitalization that we propose in this case is the best benefit to the ratepayer. If you take just the simple isolated supposition that lower is better than higher, of course, that lower is always better than higher, but
Okay.
we're not making investments just for today or tomorrow, but we've been in Mississippi a long time. We're going to continue to be in Mississippi going forward. And so when you look at step back and look at the longer term view, the capitalization that we have is what we need to support the capital investment program that we have ongoing.
But as a general rule, all else being equal, the answer to my question is that a lower WACC is generally more beneficial to ratepayers than a higher WACC.
I believe that I answered that if you're just looking at if something is lower versus higher, that's always true.
Okay. All right. So is your testimony that all else being equal, ratepayers would rather pay more than less?
I think our customers get a service from us, and those customers want to pay for safe and reliable service. And so certainly everybody with your household bills wants to pay an efficient amount, but customers make choices every day, and they're always going to make a choice for natural gas to bring energy to their home because that's the lowest cost compared to heating their home with electricity. So we're in a competitive market with, electric, particularly in southern areas where heat pumps are prevalent. And so we've got to be conscious and aware of what our customers can pay. And we want to provide that overall service in the most efficient manner that we can. And in some respects, we may have higher capitalization than our peer utilities, but when you look at our overall deliverability, I believe Ms. Collins talked about how we compare in the surveys that we use in the performance factor, and we're not at the high end, we're in the middle of the pack.
Okay. Let's talk about Atmos's capital structure. They currently have a 60% equity, and they're rated A2 by Moody's and A- by S&P, correct?
Yes.
Is it fair to say that the rating agencies closely look at a company's financial ratios, or credit metrics as they're called, and that these are one of the primary determinants of credit ratings?
Would you repeat the question, please?
Is it fair to say that rating agencies closely look at the company's financial ratios and that these are one of the primary determinants of credit ratings?
Yes, that looking at our financial ratios and the analysis similar to what I have in my rebuttal exhibit is those are a couple of the important ratios and secondary ratios that they look at when evaluating an overall company's credit worthiness along with other factors.
Okay. Is it fair to say that a company's capital structure has a very significant impact on those financial credit ratios, and that all else being equal, higher levels of equity generally result in higher credit ratings?
Yes, I would agree that the primary reason that we've increased our capital structure over the last decade was to support a stronger credit rating, which would enable us to access capital markets on more favorable terms.
Okay. Now you said Atmos's current equity ratio is about 60%, but historically that wasn't always the case, was it?
For the last 5 years, it's been that. So if your context is 5 years, I would disagree.
Is it true that within the last 20, the company's equity ratio was under 50% for an extended period of time and was as low as 40% at one point?
If you look at my entire career at Atmos, there was times early on in its existence that we were a much more leveraged company, but you also look at the capital investment that we were required to make in the system, and we didn't need to have a stronger capital ratio at that time. So
Okay.
we had the capital structure that was appropriate to support our operations at that time. In the last decade, as we stepped up our capital investment to more proactively replace old obsolete pipe, we knew we needed to have a stronger capital structure in order to access capital markets on a frequent basis. So we had a business reason for moving our equity ratio up.
Yes, sir, and I appreciate that explanation. But my question is whether or not within the last 20 years, the company's equity ratio was under 50% for an extended period of time and was low as about 40% at one time.
Yeah, I believe, when we bought the LGS properties in 2001, that we bought it with 100% debt, and that took us to like 39%, which was the low point in my career, and we slowly started building up after that.
So the answer to my question is yes.
Yes.
Thank you. During that time, did Atmos still have investment grade credit ratings despite its lower equity ratios?
I don't recall what our debt ratings were in the early 2000s.
Okay. And was Atmos unable to access capital during that time despite its lower equity ratio and lower credit ratings?
Referring back to my previous answer, at the time that you're referring to, we were not needing to access and issue equity to support capital investment at that time. And therefore, we were issuing debt on an occasional basis to refinance our short-term debt that we had accumulated. But I won't say the strategy, but the financing that was required at that time was reinvest earnings, and that would help support the equity side of the balance sheet. And then we'd take on short-term debt, and when we accumulated enough, we'd go out and issue long-term debt. And we were able to access the credit markets at that time, but our balance sheet wasn't growing very much. We weren't accessing the capital markets on a frequent basis. I believe at least since 2019, we've issued long-term debt on an annual basis. We've issued equity on an annual basis going back to 2014. So knowing as we were increasing our capital investment in the 2012 to 2014 era, that we were going to be accessing it on a more frequent basis, we felt it would be the best prudent business decision to increase and strengthen our balance sheet. And it wasn't an overnight process. I'll say slowly crept up. I know 2014 was one of the very few equity offerings that we made outside an acquisition. Up until that time, the majority of our equity offerings were in association with buying a company. But we did that one, diluted our shareholders a bit to strengthen the balance sheet, but then slowly built our balance sheet up between 2014 and 2019. And there's an exhibit in Dan's testimony that shows we've been in that 58% equity to 60, 61% equity very consistently for the last 6 years. So,
Again, Mr. Christian, I appreciate all that. My question
and I appreciate your questions.
and my question is, was Atmos during the time that the capital structure was lower, were they unable to access capital? That's a yes or
We
no.
were only doing debt capital at the time, as I explained in that answer, and we were able, and I said we were able to access capital.
So you were able to access capital, okay. Anyway, is it fair to say that one of the major reasons Atmos has a higher bond rating today than it did in the past is due to the increased equity ratio over time and the effect that it has on financial metrics that the credit rating agencies look at?
Yes.
Okay. Is it Atmos' position that having lower credit ratings is detrimental to ratepayers?
Could you repeat the question, please?
Is it Atmos' position that having lower credit ratings is detrimental to your ratepayers?
It is Atmos's position in this case that the capitalization and capital structure that we've had for the last 6 years is to the benefit of the customers. It properly finds that balance between what the company needs to access credit markets and debt and equity markets on a very frequent basis, and to support the capital investment, and that it's the customer's benefit because we're able to make those important investments in safety and reliability by having that stronger credit rating agency rating than what we had prior to 2014.
So to summarize that for me, your answer, and for the commission, you would agree that it's Atmos, that lower credit ratings, Atmos says, is detrimental to the ratepayers.
It's not to their benefit.
Okay. All right. Given that you believe ratepayers benefit from higher credit ratings, is the way I interpret your answer, how did Atmos determine that it was most appropriate to have a 60% equity ratio and a mid-A category credit rating?
Again, as I explained earlier, we knew after the call to action in 2010 by Secretary LaHood that we were going to, as he had called the industry to do, to reevaluate how we approach meeting federal safety standards, to be more proactive and understand the risk of your system and understand what is out there, and proactively address it versus reactively address it. We knew that we would need to spend more in order to be able to invest more in our system and provide that continued safe and reliable service to our customers, that we were going to need to access the capital markets on a more frequent basis. And we put into Dan's rebuttal testimony an exhibit that shows the interest savings to customers that we've been able to incur or be able to save, that on a corporate-wide basis is, I believe, over $22 million at this point, by having this higher rating versus had we been a more leveraged company as we started down this road. It would have, we'd be paying more in interest expense today. And so we think, was there a simple textbook analysis similar to what your witness did in this case? No, there's not. We didn't have anything to produce in testimony. It was just more the business decision that we're going to be able to present the story to the people that are going to loan us the money or buy our equity, that it was going to take a better rating than what we had to do that. and have the investor confidence. And without that investor confidence, we wouldn't be able to have made the investments that we made over the past decade.
Um, So is it fair to say there was no rigorous process that Atmos used to determine it was most appropriate to have 60% equity ratio and a mid-A category credit rating?
I would disagree. I would say the process that we went through is the annual process that we go through every year. And that is we have ground level detailed budgets that are, brought to across the corporation by, people like Chad, or that was in Chad's position at the time. I believe it was Dave Doggett at the time. And he and his team evaluated in light of if we need to invest more in the safety and reliability of our system, what are the projects we need to do. When you accumulate that across all of Atmos's jurisdictions and plug that into a model to see what impact of this CapEx is it going to have on our ability to balance short-term needs with long-term needs. As we went through those processes between 2012 and 2015, we felt like based on what we had been spending and where our long-term plans were, that it was going to take 60% to, it was going to take, I'll say 60%, it was going to take the high 50s to up to 60% to produce the credit, to produce the cash flow to meet the credit metrics to be able to sustain this over the long term. And we knew this was going to be a long-term process. This wasn't just to go spend a lot of money one year and you're done, because it wouldn't be prudent for the customers to, pay for a whole new system in a year. It wouldn't be practical for us to install a whole new system in a year. So again, the rigorous process, I would say, is our annual planning process, where each year, that ground up process combined with evaluating how you meet those resource needs is what drove the decision to get us to the cap structure range that we've been in the last several years.
Okay. Well, let me ask you a question. Do you know if Atmos consulted with any investment bankers that sell your debt or lenders?
I mean, I know I wasn't in the room. It was more of Dan's role as treasurer, but yeah, Dan and the CFO and meet with investors on a regular basis. And I also know that, on an annual basis, our CEO and CFO participate in different analyst days. I know AGA has an analyst day. It seems like every May they have a financial forum. So certainly we meet with investors on a regular basis to tell them our story.
When you told your story to these investment bankers, did they tell you that, say, a BBB rating, that at a BBB rating you couldn't access capital?
I wasn't in the
For
room.
example-
I'm not in the room, but I'm sure that they wouldn't make statements like that.
Okay. And you said that in your belief that higher credit ratings are beneficial to ratepayers. And so during this process, and you're targeting a credit rating, for instance, why stop at just an A rating? Aren't there AA or even AAA ratings?
There are higher ratings, but I don't know that, and to correct you on one thing, that I don't think I'd refer to our customers as ratepayers, because they do get a service for what we provide. And that, the difference in an A rating and a AAA rating is, I don't know that there's enough of a distinguishable difference in the rate that we'd be able to obtain on our debt to go that extra mile.
Okay. What about a BB versus A? You go the extra mile for that?
Yeah, I would. And you look back at during Tax Cut and Job Acts at some of the ratings agency reports, particularly I'm thinking of one at ratings agency report that came out in February of 2018. There were several utilities that were put on credit watch, and the commonality amongst all those utilities is they were BBB companies or worse. And there's concern amongst the ratings agencies that with the change in corporate tax law and the refunds that were going to be flowing back to customers to reflect the 21% tax rate versus 35% tax rate, as well as the lowered cash flow that was associated with lower taxes being built into the cost of service, it was going to result in more stress on those companies that weren't A-rated versus the ones that were A-rated. So my recollection of that report is we were not put on credit watch because we had the financial strength. There were several utilities, I say particularly holding companies, that were put on credit watch, and several did subsequently receive downgrades. So there is a distinction.
Okay. Is it your position that the approach that your company used to seek out a higher credit rating is something the commission should just defer entirely to Atmos's subjective judgment on that?
Well, I believe, as I've stated in my rebuttal testimony, that we have a Supreme Court decision, Pittman versus PSC, that does support the premise that the commission should, certainly evaluate the evidence in the document, and you go back and look at that Supreme Court decision and the type of evidence that Intex put into the docket, as well as commission staff at that time that was supportive of it, and is very similar and I'll say falls in line with the same type of information that we're presenting in this docket. And to the extent the commissioners agree that we put forth that same type of evidence, the court says that, yes, they certainly don't need to insert them into the company's decision-making process.
So your interpretation is the commission, when it comes to inquiry into the company's process under these facts, that the law of the land says, hey, you got to go with our judgment. You can't substitute and analyze on their own and make a decision contrary or different than what Atmos.
Well, they certainly need to look at and evaluate the evidence that we've put and confirm that the evidence that we put forth in this case lines up with that decision. But unless something has changed at the Supreme Court, it would seem very logical that if the evidence in this case versus evidence in that case, that, certainly it's an older case in the 80s, but the type of information, the analysis that the court articulated in that decision, came to the conclusion that looking out across the land at other commission decisions that address the same issue, and within those decisions that are cited, which I recount in my rebuttal testimony, that I'll say the experts that have gone out and looked at optimal capital structure and evaluated what utilities need to have for a capital structure, the court came down and said that, after all this analysis, considering the evidence, considering the other decisions, considering there's some Virginia Law Review articles in that decision, we come down and affirm that, and the commission should follow the company's discretion on this. It did make that note that said it's not an absolute, that there's certainly instances that could come up that they could substitute their judgment, but none of those things exist in this case because you all haven't put forth any evidence accusing us of imprudence.
That's your opinion. It hadn't happened in this case, but isn't it their job to determine the evidence in this case?
It's certainly their
And to
job.
make a
It is
decision.
their job to evaluate the evidence in this case.
And make a decision based on
I'm just assessing that I read your testimony, and I don't see anywhere where you accuse us of it being imprudent over capital structure management.
That's your opinion.
No, you read the testimony, and nowhere in there does the testimony say that.
Repeat that, please.
Okay, in your witness's testimony, he does not say the company has managed their capital structure imprudently.
I didn't ask that question.
You just asked me to repeat what I said.
Yeah, to repeat what you said, because I wasn't quite sure I was hearing what I thought I was hearing.
Okay, well, we can go on.
Okay, so you've read all the testimony, and you're telling the commission there's nothing in staff testimony, and therefore that's the end of the inquiry?
I'm saying that
That's your opinion, right?
I'm saying they're going to evaluate the evidence in this case.
But your opinion is that, hey, there is no question here. for them to even consider? Based on.
I'm not
your-
telling them not to consider the evidence, no.
Okay.
I'm telling them, yes, consider the evidence. I believe that they would agree with me, in my opinion.
Okay. But they certainly have, you're not saying that they don't have the authority and the duty to examine the evidence themselves.
As with all
And make-
evidence.
let me finish my question.
Okay,
Okay? I've given you a lot of leeway. At the instruction of the commission. My question is, are you saying that they do not have the right to examine the evidence in this case and make a decision that doesn't automatically accept your opinion or those of your colleagues on this issue?
I'm
Yes or
saying,
no?
I'm not saying that, no.
Okay, you're not saying. So they do have the ability to do that.
As with all the evidence in this case, on all the issues, they certainly have an obligation, and it's their duty as commissioners to fairly evaluate and balance the needs of the utility with the customer and keep those things in the balance.
Okay, well, that's what I was asking your opinion without going around the world to get there.
Okay.
All right. And that'd be correct. I agree with you there. They do have the authority, and it is their duty. Now, when Atmos chose its capital structure with 60% equity, did you examine how different equity ratios would affect the company's credit ratings and cost of debt?
Not in this case.
Okay. Not in this case. All righty. Is that not part of the equation?
I'm not sure I understand your question.
You didn't, so are you telling me that Atmos did no analysis when it chose its actual capital structure with the 60% equity to examine the different equity ratios and how they would affect the company's credit ratings and costs of debt between like 60% and 50% and do that step?
So I guess I would say as part of our annual planning process that yes, they do evaluate the resources of the next year's capital budget and plug that into a longer term plan to evaluate how we are going to finance those capital investment needs. And I'm sure that they look at the forecast capital structures year by year to evaluate what levels of debt and equity and roughly when that debt and equity would need to be issued to maintain our existing credit ratings.
So the answer to my question is yes, they did do that comparison?
So we do that on an annual basis, as part of the annual capital planning process. As part of a rate case, we want to be able to establish rates in this proceeding that reflect our actual cost of doing business. And our actual cost of doing business would be our actual capital structure be utilized in establishing rates in this case.
Okay. My question is, though, and I appreciate that, and I'm just going to try to make this as simple as possible, Mr. Christian, and I ask you just to give a direct answer. And your answers are good, and I understand that, but at a level that I can understand.
Okay.
Okay? When Atmos chose its actual capital structure with 60% equity, you're here on behalf of Atmos, right?
Yes.
You got a whole lot of knowledge. You were there how many years, Mr. Christian?
Yeah, over 35 years.
Yes. I mean, you're an expert on this, right?
Yes.
And it's a simple question. And in my opinion, it doesn't require a long, around-the-world answer that gets windy and confusing. What I'm asking is when Atmos chose its actual capital structure with 60% equity, did you examine how different equity ratios would affect the company's credit ratings and the cost of debt?
And I'm confused by the question because I'm not sure how that would, I'll say, be pertinent or relevant to what we're asking for in this case.
Well, do you agree that it's the commission's determination of what is relevant in this case, and I just ask the question, you answer it, and they determine if your answer is relevant or the question's relevant.
I would agree.
Okay. And there was no objection from counsel about the relevancy, was it?
I
You
would
might make
agree.
one now, but,
I would agree.
okay. So could you just answer the question?
I did not have a need to do that because I did not see the relevance of doing the analysis that you inquired about.
All right. Well, thank you for that. Court's indulgence for 1 second.
Yes, sir. Here.
Okay. If I may, this is Exhibit JEM 23, docketed in this case. It's the staff's data request, set number 7, question 7-1. The respondent was Dan Mazier. And you're adopting Mr. Mazier's testimony in this case, are you not?
Correct. And you said 7 dash.
Yeah, and I don't know if we let you find this. Can you find this, Kyle? Okay.
What's the number again?
The number is exhibit.
We could put it on the screen if it's helpful.
Sure.
Yeah, that'd be great. Thank you, Ms. Bass.
We're talking about 7-6.
Thank you, Ms. Bass. That's very helpful. Appreciate it.
7-1.
Oh. Yes, and that's in my rebuttal exhibit, as I think you were referencing, and it is the very first page of Exhibit 3.
It's this one, Kyle. That right there.
We'll all get there.
It's a race. Connor's getting there.
Work faster, Connor. Just kidding, thanks.
And I have it in front of me if you, do we need to wait for
We'll
y'all
wait
to
for
see
the-
it?
Yeah, let us get a
Yeah,
copy of
let's
it
see.
first.
Okay.
Thanks. I'll tell you what, while we get the files loaded and find let's take a 5-minute break.
Yeah.
We'll get started again. Looks like Connor got it up on the screen. Good job, Connor. Thanks.
All right.
You get a silver star.
But a star nonetheless.
Mr. Jones, you may continue.
Thank you, Mr.
Thank you.
Chairman. Okay, Mr. Christian, we have question number 7-01. And under request where it says page 4, I'm going to pick up and I'm going to read something. And it says, has the company performed a quantitative study of the optimal capital structure that minimizes WACC? Okay, and that question was asked to Atmos through data request by the staff. And could you read the response?
And I believe this response lines up with our earlier conversation. It says the company has not performed any quantitative analysis responsive to this question. See response to 7-6 for a comparison of S&P ratings agency cash flow ratios utilizing the company's actual capital structure compared to a hypothetical capital structure.
Okay, and thank you very much. Now, if Atmos hasn't performed such an analysis, and they say they didn't, correct? I mean, that answer is what it is.
As asked, that is exactly right.
Right. The company has not performed any quantitative analysis responsive to this question, period. If that hasn't been done, then how do you know if 60% equity is what's best for ratepayers or not?
I believe we've been over this ground before.
I asked, Mr. Chairman, I asked the witness to answer the question, his opinion on whether we've been over it before. It's my cross-examination.
Let's not talk over one another. Thank you.
It's my cross-examination. He does it, the witness does not decide what questions are relevant or what he's going to answer or not.
Mr. Chairman,
Yes, sir.
we've answered every question. Mr. Jones is just disappointed in the answers.
I love the
We'd
answer.
appreciate it if we just go forward with a question and answer as the rules say we should.
Now we're trying to get to both sides. So any questions that you can answer, we'd appreciate that, just for clarity for us, because it's a big decision. I know there's a lot going on. So just answer the question best to your ability.
I certainly agree, and if he had allowed me to finish, I was just
Well,
noting that we had talked about this before, and
Correct.
I
Well,
believe that the analysis goes back to that we do to support the capital structure request.
and again, it may be quicker, just to answer directly. And I appreciate everybody working together to let's get through this. Thank you.
Okay.
If I can,
You may proceed.
okay. If Atmos, Mr. Christian, if Atmos hasn't performed such an analysis, then you don't know if 60% equity is what's best for ratepayers, do you?
I disagree.
I will add to the witness, if you don't want to answer the question, just say, I don't want to answer the question.
Okay.
So anyway, thank you.
Has Atmos examined how different capital structures would affect the weighted average cost of capital and thus customer rates?
The company has, through its annual evaluation of our long-term planning process, evaluated the impact of the financing needs, and within that analysis determines what debt and equity issuances there needs to be to maintain our credit ratings.
Okay. And again, has Atmos examined how different capital structures would affect the weighted average cost of capital and thus customer rates?
And my shorter answer to that question is yes.
Okay. Did you produce that information in response to the staff discovery request in this case?
As the question was asked in 7-1, I don't believe he was looking for the type of analysis that I'm referring to here.
Okay. So you're talking about a different type of analysis than Mr. Mazier, but you're adopting
No,
Mr. Mazier?
I'm talking about a different type of analysis than what the question asked.
Okay.
The question asks, has the company performed a quantitative study of the optimal capital structure that minimizes WACC? And we have not performed that. We have performed the analysis necessary to understand how to finance the capital investment that we're making.
Okay.
Those are two different types of analysis. I'm sure this is confusing to you.
All right. Thank you for that. That wasn't my question.
It's in your question. I'm sorry if I'm misunderstanding.
Yes, sir. And I apologize if I confused you. Here's my question. Has Atmos examined how different capital structures would affect the weighted average cost of capital and thus customers' rates?
The company has not performed any quantitative analysis responsive to this question.
All right. All righty. In deciding to have a 60% equity ratio, did Atmos examine the capital structures of other natural gas utilities?
In my role former role as Director of Race and Regulatory Affairs, I've certainly evaluated our peer companies and understand, I'll say, a fair amount of what the peers are out there doing in terms of financing and capital structures that they maintain.
Okay. And let's talk a little bit, if we can, about Atmos's peer natural gas utilities. You've read most of Mr. DeCendis' testimony in this case?
I've reviewed his testimony, yes.
Okay. And what about Mr. Mayu?
Yes.
Okay. Both of those examine Atmos's peers that are members of the Value Line Natural Gas Utilities Group. Would you agree?
I know, reading through Dylan's testimony, he has a pretty, he details the process he follows to pick the proxy group that he uses in his analysis.
Okay.
And I believe Mr. Mayu also has at least a discussion about proxy group selection.
Okay. And to be clear, I'm talking about the consolidated parent companies whose stocks actually traded.
Yes, I agree.
All right, thank you. Are you aware that those natural gas utilities have an average equity ratio of less than 50%?
Are you talking about anyone in particular or just the overall average of 43%?
Well, I want to refer you to something if I can.
Okay, that'd be good.
It may help us out a little bit. It's if I can find it, Mr. Christian. Is this- May I approach?
Yes, sir, you may approach.
Okay.
Thank you.
I want to hand you, Mr. Christian, what's been marked, or what is exhibit number DWD-15R in this docketed case, 2025 UN 59.
Excuse me, Counselor. Does Connor need to get this on the screen? Are we good? Does Connor need to get this on the screen, or are we good
I
without it?
think it would be good if you want to see it.
He can, is Connor still in here?
Yeah.
He can, but it is also in your notebooks as an exhibit to Mr. DeCendis' testimony.
Okay.
So,
You want to leave?
We'll be fine without it. Thank you.
okay.
Thanks, Connor. Trying to get him up to a gold star, sorry.
Leave it up. Just tell me, continue this.
Hang in there, Connor.
Skip it. All right. Yeah.
You may continue.
Okay. That's a copy of Mr. DeCendis' an exhibit to his testimony. And these are the natural gas utilities that I'm referring to. Have you had a chance to look over those?
Yes.
Okay. Are you aware that those natural gas utilities have an average equity ratio less than 50%?
Yes.
Okay. Are you aware that those peer natural gas utilities all have investment grade credit ratings that average B, B, B plus?
I'm not aware of their exact rating, but I'll take you at your representation.
Okay. Thank you, sir. Do you have any reason to believe that those companies do not have ready access to debt and equity in the capital markets?
I believe that I address the difference in Atmos Energy is not a holding company versus the majority of these being holding companies, and the transparency that you get through evaluating our capital structure versus the leverage that exists within their parent companies, which is what we're looking at for at least several of these, that the cap structure that they maintain for public equity issuances versus what is set in rates at their subsidiaries, I believe is different.
Yeah, but would you agree with me this is, Mr. DeCendis is the return on equity expert for your company
I would agree,
in this
yes.
case? And would you agree with me that he submitted as part of his testimony in this case, this document here that we're talking about, Exhibit DWD 15R, that lists peer natural gas companies. Is that correct?
We have no dispute there, I would agree.
Okay. And so is it your testimony that your witness, when he said these are peer companies, they're really not peer companies, and so this is a worthless piece of paper?
If you would read my rebuttal testimony, I address the fact that there are more than just 7 companies in the world, that there's been several rate outcomes that have a lot broader spectrum of average equities that would be also informative in addition to these when evaluating our capital
Okay.
structure.
But are you, so,
So it's not my testimony that these aren't our peers. These are our peers. They're very good,
they're peer-
comparable companies.
Okay, so I'm confused about what you just said when I asked you that question about these companies, that you went into a response that, well, Atmos is different than all these companies. I mean, did I just mishear you?
No, I agree that I don't understand the details of all their businesses, but I don't know that they're investing as much as we are, so they have different financing needs. They manage their balance sheet to fit their operational goals.
Yeah.
We manage our balance sheet to fit our operational needs, and there are distinctions and differences as to why we would have different capital structures.
Okay, well, maybe so. But my question is, these are peer companies, natural gas utilities, not so much different than Atmos Energy Corporation.
We all provide the same service, yes.
So much alike that your own expert, Mr. DeCendis, in approaching this commission about setting rates in this case, attached this as an exhibit of comparison of like companies for them to decide and look at, and you're telling me that the list is not accurate?
I did not.
Or it doesn't apply?
I did not tell you that, no.
That it's apples or orange? I mean, are these oranges and Atmos is an apple?
It depends on the question.
For the
but
purposes of establishing rates in this case, and just the question I just asked?
they are apples to apples.
Okay, thank you. Now, I'm going to go back to my question. Now that we've established that, you have any reason to believe that those companies do not have ready access to debt and equity in the capital markets?
I don't have that knowledge.
Okay, thank you. Is it your opinion or position that these peer natural gas companies are all imprudently managed and that the capital structures are detrimental to their ratepayers?
That is not my position.
Okay.
I have a question. I'm sorry to interrupt. Could you tell me again what exhibit number we're referring to?
Yes, ma'am. That is Exhibit DWD-15R,
15R. Thank you.
which, matter of fact, I'll go ahead and for the purposes of this line of questioning, move that exhibit as the next exhibit, staff's exhibit in evidence.
I think it's
Number 10. Yes, ma'am. And I'll give you, you can have my copy. I wrote me on there. Put your sticker.
Any objections?
Is that part of Mr. DeSantis' testimony that pre-filed?
Yes, sir.
Mr. Chairman, I'm not sure we've done this yet, but we would ask that all pre-filed testimony in this case be admitted into the record.
Yes, sir. The court reporter has requested that we hand them one at a time for ease in recording.
And just to clarify, Emily and I exchanged exhibit lists of all of that pre-filed material, and so we'll provide that after the hearing. We exchanged it with each other, but we didn't give it to the court reporter. So can we provide that afterwards? So that
We can, but I would like to clarify for the record, Mr. Chairman, there is a procedural rule the number escapes me right now, but under, it's chapter 15 in our procedural rules, there's a rule that automatically.
We have a rule book today. We're going to find
admits, right?
Yeah.
we actually have 6 rule books. Anybody need one?
Okay, good. And despite that, I still didn't bring mine, but from my memory, chapter 15, in a public proceeding, the direct testimony that is pre-filed in a hearing such as this is automatically admitted into the record.
Great.
But I believe for purposes of the record, I will let Atmos speak for their side about admitting it separately.
Well, I just thought it would be helpful for it to be numbered, so perhaps after we, or maybe not, we can talk about this, but we, as long as it's in the record and will be able to be referred to in post-hearing briefs, we're good.
I
Okay.
agree.
Everybody good? Perfect. Thank you. You may continue, Mr. Jones.
Okay, thank you, sir. Now, if we can, let me ask you about the cap structures of other natural gas utilities that have been the subject of rate cases around the country. And you have an exhibit, Mr. Christian, I believe is JTC-R-2. And I've got a copy, if you don't have it.
I've got it.
You got it? Okay.
Did we file the last one as exhibit?
Yeah.
Okay, this
this
will
will
be
be-
11? This will be 11.
And I move that into the record, Mr. Chairman, as Staff Exhibit 11. All right?
Hearing no objections, Madam Court Reporter, put that as item number 11. You may proceed, Mr. Jones.
Okay, thank you, Your Honor. You've got your copy of that, Mr. Christian?
Yes, I'm over to page 1.
Let's look at 2025 year-to-date through August. And I want to refer you back to your rebuttal testimony on page 10. You indicate that for the year-to-date,
Just 1 second.
something just fell away. For the year-to-date,
Hold on, counsel. He's looking.
Okay.
Okay,
okay.
may proceed.
In your rebuttal testimony on page 10, you indicate that for the year-to-date 2025, the equity ratios authorized by regulatory commissions around the country have ranged from 43% to 61%. Is that correct?
Correct.
All right. Now let's look at your exhibit, JTCR2. For 2025 year-to-date, what company received the highest authorized equity ratio of 61?
Just make sure I get this right. Would you repeat the question?
Yeah. Looking at your own exhibit that went with your testimony, for the 2025 year-to-date, what company on your list, and you list out, Lord, how many companies are on your list?
188.
188 companies from, Lord, I guess all 50 states, huh?
Well, I
Pretty
know
much.
I know S&P Capital IQ tries to track all 50 states and Canada, but there's a limit to what they track. So
I get you.
it's the most comprehensive list available, but
Okay.
not entirely comprehensive.
Yes.
But yeah. So are you referring then to line
I'm
177 by chance?
I don't know. That's what I'm asking you. My question is, what company on this 188 company list that's part of your exhibit to your testimony to this commission has the highest authorized equity ratio of 61%.
Okay, so there's a 60.61 in this list.
Who's got the highest? Take your
And
time.
I'm looking for that, but I know it's not Atmos because I do two columns, one with Atmos and one without. And I put a formula in, so,
In 2025.
oh, just
Yeah,
2025.
year-to-date.
Oh, not 2023, 2024, and 2025, which is
No.
what the exhibit is.
Year-to-date
but just-
2025.
Okay, so likely going to be the 6105 that's listed there on line 177, which is our actual capital structure that was authorized in Tennessee.
Have you found it yet?
That's what I was saying.
What was your answer?
Line 188, or excuse me, line 177 on page 7 of 30. Is that the one?
6105? What does ATO stand for?
I said that was Atmos Energy as I was giving
Oh,
the answer.
so
Yes.
the answer is, to my question, who's got the highest authorized equity ratio of everybody of the 188 people on your list is Atmos?
I need a correction on that. When I said 188, I thought this exhibit has 2023, 2024, and 2025.
Well, how many companies did you list for 2025?
Just 1 minute. So 2025 begins on page 6 of 30. At line 150. So I believe there's 38 outcomes through August of 2025.
Okay.
Of which,
So,
of the 38, then I would say that there's 10 that don't have capital structure. So 38, so that'd be roughly 28 outcomes in the first 8 months of 2025.
okay.
So of the 28 outcomes, Atmos has the highest.
Okay. Atmos has got the highest for 2025.
Yep, our actual capital structure.
Okay. And now, if we can, and this is a list that you provided.
Yes, it is
All
from
right.
S&P Global Intelligence.
Now, looking at that year to date, if you remove Atmos from that list
And this is the
for 2025,
Yes.
if you remove them, what would the average authorized equity for the 225 year to date be?
I'm not for sure.
Okay. It's 51.5%.
Is that from your witness's testimony by chance?
That's the calculation of the staff based on our experts. Yes.
Yeah, I think I recalled it from his testimony.
Okay.
I mean, I'll check that though. His testimony only did the first 6 months.
Yeah.
He didn't do 8 months.
All right. But do you dispute what I just said? That
I'm just adding the clarification for the record. I'm not disputing. I'm just
Okay.
saying his was only 6 months of results, and I've added 8 months into this.
So the answer to my question, the answer is 51.5%.
It's not going to change a lot, no.
Okay. Now, let's go to 2024.
Okay.
What was the highest authorized equity ratio in 2024? Who had it and what was it?
So 2024, beginning on line 73.
I apologize, Mr. Christian. I missed your response, sir.
2024, beginning on line 73 is where 24 begins. Looking down through that list, there's a 59 Texas Gas and result in Texas. There is a 60.61, which is another Texas result for CenterPoint Energy Resources, which I believe is going to be the highest because I have a formula there that you can see at the top of the page. It says maximum 60.61. So I'm thinking it's going to be CenterPoint on line 88,
Okay,
4 of 30.
you saying it's center point,
Yeah, it's 60.61.
not 62%? It's not the highest?
If you would direct me to, oh, let's see, I do see a 62 there. Oh, you know what?
I mean, it's your list.
Okay, so here it is I was looking at the max without Atmos, but yeah, Atmos does have, again, Tennessee does actual capital structure similar to what we're requesting here, and our actual at September of 2023, which would have been authorized in 2024, was 62.38%.
So for 2024, of this list that you submitted for the highest authorized equity ratio, and this is your list, 62%, and the highest Atmos wins on that one too. Correct?
If you consider winning being the highest,
I don't.
that was your representation.
Hey, that's a good point.
Yeah.
I don't consider it being the highest, 62% to be winning. I don't, not winning for the ratepayer. Now, let's look at 2023.
Okay.
And in 2023, what company on your list has the highest authorized equity ratio?
Okay, and I'm seeing Texas Gas at 59.74. Again, Texas is very supportive of utilities and their capital investment plans. Roanoke, 59.63, not quite as high. And there's, again, a 62.2 in Tennessee on line 18 on page 1 of 30. So yes, we have the highest again. And again, it falls right in line with Dan's direct exhibit where he gave our actual capital structure the last 5-6 years since 2019 has ranged in that 58 to 62% range.
And I appreciate that, but I'm talking about your exhibit. And for 2023, the answer is, again, Atmos with the highest authorized equity ratio is 62%.
I agree.
All right. And without that, and I don't know if I asked you about this for 2024, if you took Atmos out of 2024 off your list, would you dispute or would you agree with me that the average equity ratio authorized in 2024, if you don't count Atmos, would be 51.8%?
Just for calendar 2024?
Yeah. I just forgot.
I know I calculated it for the entire range of 52.06, and the number that you gave is very close to that, so I would have no reason to disagree with you.
All right. The average would be 52, by your numbers, 52.6?
06.
52.06.
Yeah, and if you want to look at it, it's
10
kind of in the heading.
10% less than what Atmos has got. 62 is Atmos. Take them out, the average would be 50-something .6. Okay, I get it.
Well, so would you like me to answer?
No, I'm ready to move on 2023.
Okay.
And ask the same question there. And where Atmos, again, has the highest 62% authorized equity ratio. And if you eliminated Atmos and took Atmos off that list, would you disagree with me that the average equity ratio authorized in 2023, all those people on the list, less Atmos, comes out to 52%?
I performed the calculation on the entire 2 years and 8 months, and I put it in a little box at the top of page 1 of 30, and you can see the averages with and without Atmos, and it makes about a half a point, not just the 62.05, but take all the Atmos results out listed on the 30 pages, and so it makes about a half a point difference in that.
And look, I appreciate that.
I appreciate that you appreciate that.
I do. But what I'm asking is what the average equity ratio authorized in 2023 would be if you eliminated Atmos' 62%. What would be the average among the other ones?
I do not have that calculation with
Okay.
me.
And would you disagree with me that the calculation made by our people, we do have that calculation, and it's 52%?
I have no reason to dispute your
Okay.
calculation.
Okay, thank you. Now, so all those questions boil into the pot, comes out that Atmos's equity ratio is about 10% higher than the average. It looks like our averages are, say, 52% if you exclude Atmos. If you throw Atmos in there with the highs, it's 62.
Well, and your question characterizes all of the Atmos results listed in these 32 pages as being 62%. And a simple review of the list would show you we're not at 62% for all of those results. So I would disagree with your characterization.
Well, I mean, I don't want to have to go through all this again, but I thought we just did, that on each one, to each question, from 2025 down to 2023, that Atmos was at 62% ROE, and if you remove them from it, then numbers that you did not dispute, our number would be, if you remove Atmos, it'd be 52%, and to me, that means that there's a 10% difference. Unless it's some kind of accounting I don't understand, but that's, or the commission doesn't understand.
My only point of distinction is line 13, Colorado Atmos Energy Corp outcome is 58%. And you're suggesting on the entire, your question suggests that all of the outcomes listed in the 188 outcomes have 62% for Atmos, and it's simply not true.
Okay. But the answer to my question, by year, remain the same, your answers.
I disagree.
Okay, well, let's do it again. Because you just agreed with me when we went through it, now you're saying you disagree with me. So which one is it?
You're asking a different question.
Let me rephrase it then. In 2025, what company had the highest ROE?
Atmos Energy had the highest ROE.
Sir?
For 2025 on the outcomes, Atmos Energy had the highest ROE.
Okay, and what was that ROE?
For 2025, just one second. For 2025, Atmos had an outcome in Kansas with no capital structure listed. Atmos Energy on line 162 had an outcome of 60.097 for a Texas distribution case. Excuse me. For 2025, Atmos Energy had a Kentucky outcome with on a limited issue rider with no capital structure listed. Atmos had another Texas outcome at 60.97. And then on line 177, Atmos had another outcome of 61.05.
Bingo.
And then finally in Kentucky, we had an outcome of 53.5. And so we had a variety of outcomes listed in 2025 year to date.
Yeah.
And the one highest is Atmos, but the point to the question that we were just discussing prior to this, you made it appear as though if you pulled Atmos out of this list, there was a 10-point difference, and that's just simply not true.
I'm still not following. We just have a miscommunication on the
Agree.
last question.
I would agree.
So I just want to clarify clarify our miscommunication.
Let's continue that miscommunication.
Okay. And so for 2025, Atmos had the highest authorized equity ratio of 61%. And this is based on your previous testimony that's on the record. And that if you removed Atmos from that calculation for the 225 year to date, then the average authorized equity ratio would be 51.5%, a number we've calculated, you said that you cannot dispute. And then going to 2024, your testimony, very simple. Who had the highest in your list, not my list, your list, who had the highest? 62%, Atmos.
For 2020,
2024.
okay,
And if you remove them from 2024, then the average would be 51.8. And that's our calculation, and you can't dispute it, don't dispute it, you don't have a witness that disputes it. In 2023, we're the highest equity ratio. Again, Bing, Atmos, 62%. You take Atmos out of 2023, then the average of everybody else on your list is 52%, and you don't dispute that. You agree?
Hold on.
and that's where we have the disconnect. You say everybody else, and I'm only pointing out that you have to take out more than just the one outcome. You have to take all of the Atmos energy out, and I've got that calculation at the top of the exhibit for the comprehensive time period, and so I'm puzzled as to why you continue to parse this by year, but please continue.
I don't want to puzzle you, Mr. Christian, so I'll move on
Thank you.
before you puzzle them. Do you have any reason to believe that those other natural gas companies will not be able to access debt and equity?
I have reason to believe that they are going to finance their company to fit their operations. Therefore, they will be able to access the capital markets at the time and tenor that they need to support their operations.
And do you believe those companies are being imprudently managing their capital structure?
I believe that they are all managed to the best of their abilities to provide service for their customers.
Do you believe when those companies' regulatory commissions, like the PSC, that they acted unjustly or unreasonably when they approved equity ratios that averaged just under 52%?
I have that belief about one of those outcomes, but the others, I have no reason to question one way or the other.
So what is it about Atmos that you believe is special or so special that they should have the highest equity ratio of any natural gas company in the country?
I believe that Atmos Energy has financed this business to support the operations that we have. And those operations that Chad talked about yesterday, that Jeff talked about yesterday, we have safety regulations we need to comply with. And Chad and his team does their best to identify the projects that they need. And you know, their projects, along with other engineers in similar positions in other states, when you add all that up, it produces the capital budget that the finance team then needs to go out and incorporate into our long-term plans. This isn't just a short-term horizon that we're looking at. We don't think about this as something that you just make on a whim. But we built our capital structure and strengthened it over the last decade. We maintained it in a good spot to withstand external interruptions. Talked about Tax Cut Job Act earlier. Also had COVID that caused a lot of stress on bill payments that we weren't able to do our normal collections. We also, though it didn't impact Mississippi, had issues with Winter Storm Uri and managed through all those external events without a downgrade to our credit. Though we did get a downgrade this past year, which I think reflects the tightness of our capitalization that is going to put us in a more difficult spot if we were to lower our overall capitalization, which, again, a range of the high 50s to low 60s is where we're trying to manage. And so thinking about your question and thinking about these other companies and the way I disagree with how you characterize that question, that it's not the way you phrase it, but we all have our operational differences. We all have our goals. They have their reasons for managing the way they do. We've got the evidence in this record that supports the way we manage our balance sheet, the way we do.
Anything else?
That's it.
Okay. Let's move on to cash working capital. One quick question. Do you agree that Atmos Corporation pays third-party lenders cash payments for interest expense.
Yes.
Okay. Can you confirm on page 11 and 12 of your direct testimony that you included a long-term debt lag in your lead lag study for cash working capital?
Could you give me that page reference again, please?
Yeah, it's page 11, 12, 11 and 12.
Yeah. I'll wait till they're ready. I don't ever want anybody to miss out on discussions of cash working capital. It's a very riveting topic. But, so the question was, would you repeat the question, please?
Did you confirm on page 11 and 12 of your direct testimony that you included a long-term debt lag in your lead lag study for cash working capital?
Yeah, as part of the overall methodology, it is holistic. You would include it in under the methodology that I selected. Yes, I agree. If you were to exclude it, similar to the Texas rule that your witness pointed out, they don't include long-term debt in that methodology. So if you were adjusting methodologies and picking the methodology that the Texas PUC has articulated, I believe for water utilities, then you would need to exclude that calculation because it kind of, I won't say violates the overall methodology to pick and choose certain items as your witness has done.
No further questions.
Thank you, Ms. Jones. Ms. Bass, you're recognized. Thank y'all for exercising decorum. Today's great. Thanks. We're even appreciating people being appreciated.
I love the vibe. Okay. Mr. Christian, I just want to go back and clarify a few things. And I wanted to start out, you said that you adopted Dan Mazier's testimony, but we didn't get into the record what Dan Mazier's role is and his job description at Atmos Energy. Could you give us an overview of that?
Dan is the corporate treasurer of Atmos Energy.
May I make an interjection here?
Yes, right quick.
Isn't that appropriate to talk about Mazier if he's co-sponsoring Mazier's testimony during his preamble at the beginning, not on
All I want to establish is his
redirect?
Is his title at Atmos Energy. That's all. We didn't say that. So can we just establish for the record what his title is?
Yeah, continue.
He is the Vice President of Investor Relations and Treasurer for Atmos Energy Corp.
Thank you. All right. So in this case, Mr. Jones asked you about the weighted average cost of capital, and he asked you a question about what's better or worse for customers. Would you agree that the purpose of this case is to set rates on the actual cost of service that Atmos Energy incurs to serve its customers?
Yes.
And to set rates on the actual cost, must those rates take into account the actual cost of capital as well as the costs incurred to put the pipe in the ground and our O&M expenses?
Yes, they're all very real costs.
And so if rates are set on something lower than our actual equity ratio, is Atmos Energy able to recover the actual cost we are incurring?
It is not.
Okay. And you were asked some questions about the history of Atmos Energy and a time period when the equity ratio was in the 40% range, or in the 40s, let's say. You recall that line of questioning?
I do.
Okay, and just to be clear, did the company need to access capital at that time in the way that it needs to access capital now?
No.
And if the company had needed to access capital at that time the way it does now, would it have taken a similar strategy?
I don't know that I could speak exactly to how it would do, but I believe that, yeah, I mean, financially, and you do forecasting, and there's, to access capital markets on an annual basis, you've got to have a stronger financial profile in order to issue equity, in order to issue debt at the levels that we've been issuing at the last decade, and with the frequency with which we've been issuing and raising capital the last decade.
Okay, and just so I'm clear on any other distinctions between what may have happened in the early 2000s and what's happening now, have credit rating criteria become more stringent over that time period?
I know they've become a lot more transparent over that time period.
And did the 2008 financial crisis have any impact on perhaps how credit rating agencies were viewing and evaluating risk at companies?
Yes.
Okay. So speaking of that, how they evaluated and the process becoming more apparent, just for clarification on what these credit rating agencies, such as Moody's, is looking at when they are evaluating Atmos Energy or any other utility. I believe you talk in your testimony about there being three factors. One is regulatory framework at 25% of their evaluation. Is that correct?
Yes.
And can you explain to me what they mean by regulatory framework?
I think when they talk about regulatory framework, they certainly talk about the consistency of a commission and the supportiveness that a commission has of the utilities. And so they look at things like how achievable is the ability of a company to recover its actual costs. So do they have tariffs in place that give it a reasonable opportunity to recover cost?
And what has their perception been of the Mississippi Public Service Commission?
It's been favorable, and I know also S&P Global Intelligence has, rates and looks at commissions, and I know S&P Global Intelligence has an above average rating on the Mississippi Commission.
And if this commission were to begin to issue a series of decisions contrary to its regulatory framework, would you expect that to change as an expert?
Yes, I would agree. And it's not speculation on my part. I know we do business in Kentucky, and a new set of commissioners came in 10 or so years ago, and there was a lot of change in direction by those commissioners and once they started changing settlement orders, started issuing outcomes that were much more restrictive than prior commissions had, and S&P Global Intelligence that I referred to, took notice of that and downgraded their assessment of how Kentucky supports its utilities and a utility's ability to recover cost. And I would expect it would be a similar story here.
Okay, thank you. And the second, moving on to the second of those three, is ability to recover costs and earn returns, 25%. Do you recall that part of your testimony?
Yes.
And can you explain what that means?
Yeah, and I think that gets into a little bit also the commission and the tariffs that are approved, but it also gets down to a company's ability to execute and manage its business operations on a day-to-day basis. And can we, within the tariffs and confines of the statutes and rules that we have, produce consistent and regular cash flow to support that debt that we borrowed.
And if rates are set in this proceeding on an equity ratio that's lower than our actual, does that give the Atmos Energy the ability to recover costs and earn returns at its actual cost?
It does not.
Okay. And the third one is financial strength and key financial metrics, right, at 40%?
Yes.
And is that similar to the key financial metrics analysis that you've produced in your testimony in this case?
It is.
And would those key financial metrics be degraded if rates were set across Atmos Energy Corporation on an equity ratio that is lower than our actual equity?
Yes, and that's what the analysis supports.
Okay, thank you. And Mr. Jones asked you a lot about your list of peers, and I believe that list is a list of regulatory outcomes.
Yes.
It is. Okay. And there were a lot in there, I think, that he was pointing to you two from Atmos Energy in Tennessee, right?
Correct.
Why are there so many in there?
We have an annual mechanism, similar but with differences. But yeah, we file annually in Tennessee each year. It's a formula tariff that we follow the terms of the tariff.
And how many states do we have annual type filings in?
Oh boy. Let's see, in Texas, Louisiana, Mississippi, Tennessee, are the comprehensive.
Comprehensive ones.
And then we also have limited infrastructure riders in Virginia, Kentucky, Kansas, and we have one in Colorado through the rest of this year. Did I cover all our states in that?
Do you know of any other utility that has operations in that many states that have annual mechanisms?
I do not.
Okay, so those utilities are not receiving findings each year, regulatory orders each year that would even show in that list their actual capital structure.
That is possible, yes.
Okay, and I believe you talked about a couple of Texas decisions. I believe that CenterPoint had a rate case outcome in June 25th of 2024 that had a 60.61% equity ratio.
Yes.
Correct? And are CenterPoint's operations in Texas similar to Atmos Energy's?
Very similar at a distribution level.
And has CenterPoint had a regulatory outcome in Texas since 6/25/24?
I do not believe they have.
But do you have any reason to believe that their equity ratio is not the same or similar where they today as it was in 6/25/24?
I don't. I mean, and that is a subsidiary capital structure, I believe, and I don't have any reason to know that it would be different.
Okay, and so I think there was another one in there about Texas Gas Service, which is a division of One Gas, and on 11/19/24 of 59.58. Do you recall that one?
I do.
And has Texas Gas had another regulatory decision in Texas since that time?
I don't believe they have.
And if they did, do you have any reason to believe that their equity ratio would not be at or near 60% like it was last year?
Yeah, it's very similar, and I know in Dylan's exhibit that we discussed earlier, it shows 59.29, and since they spun off as an independent company, have tried to manage in the high 50s and low 60s,
And
similar to us.
of the list of peers that are on your list, which one has a corporate structure and operations most similar to Atmos Energy?
One Gas.
And can you explain that for the commissioners?
That we're not a holding company, they're not a holding company, so when we issue equity or they issue equity, it is the corporation that issues it. It's not pushed down from a higher level down to a subsidiary.
And what kind of operations do they conduct? Are they a combo utility or?
They're just an LDC, just like us.
Okay. Are there any other companies on the list that are large natural gas only utilities that you know of?
On which list now?
On the list that you were reviewing
on this one?
of rate outcomes.
Oh, rate outcomes.
Right? Oh no, of the one that you were reviewing where it had a list of equity ratios approved and rate outcomes.
Yeah.
If you don't know offhand,
I don't know offhand, but
we don't. Have to.
I know there's Roanoke Gas is in that list, and they have a high percentage debt equity, but
They have a high percentage of
equity.
Of equity.
Yeah.
And
they are just an LDC like we are, though they are a smaller LDC.
so you would expect those natural gas only utilities that are not set up as holding companies to be having similar needs for capital as Atmos Energy at this time.
To the extent they're operational the makeup of their system is the same, it would not be unreasonable to expect that.
Okay, are you familiar with SERFA and the cost of capital manual?
I have been to several SERFA meetings, so yes, and I'm aware and familiar with their manual.
Okay, what does Parcell say in the book about hypothetical capital structure?
He's not supportive of hypothetical capital structure.
And does he give any indication of under what extreme circumstances that might be warranted?
I'm not sure about that.
Does he say that it's only if it's out of step with the range of peers?
That would be something. The range emphasis being on range of peers.
Okay, since you were asked about some exhibits from Mr. Diascendis' testimony, I think to clarify your interpretation of those exhibits, it will be helpful to show page 89 of Mr. Diascendis' rebuttal testimony, and I believe Connor is ready to be able to share that for us.
You're up, Connor. It's going to be projected on the
Okay.
wall behind us. Is it going to be on the wall too?
It's not.
It is. Hold on just a second while
Okay.
they get it up here. Normal eyes can look at the wall.
There we go.
And the words don't matter as much as the dots. So, Mr. Christian, can you tell me what that scatter plot represents in Mr. Diascendis' testimony?
Those scatter plots exemplify a range. First are higher outcomes or lower outcomes that make up an average, and then the trend line of that dot plot is a trend upward. So over the years covered by that, it is trending upward in nature.
So, all of those dots are approved, or let's see, they're equity ratios of natural gas utilities from 2005 to present.
Yes.
And there's one dot way up there at the top that's over 80%, right? You see
Yes.
that one?
Yeah, there's one, and you can see that in the list that I've got.
And the rest of them appear to be within a fairly tight range over that time period.
Yes,
And Atmos energy is scattered amongst those dots right there.
that is correct.
Okay, and you were asked a lot about averages of peer group equity ratios. What's the relevance of an average of a peer group in determining the appropriateness of a utility's equity ratio and capital structure?
What is the relevance?
Right.
I guess it's a number, but certainly averages are made up of a range, and where does Atmos fit within that range as compared to the others?
And isn't it the range of capital structures that impacts the analyses that are approved in the literature for analyzing capital structures?
Yes, and that's one of the things that Pittman versus Mississippi Public Service Commission gets into, is it talks about in Texas capital structure in that case was within the range of that case.
Okay,
In
and
fact, and let me also qualify that, say it was also over the average in that case as well. There were 11 companies in that peer group, and I believe they were the 5th out of 11 from the top.
okay, and one last question on this topic. Was the decision to maintain the equity ratios at their current levels a decision made by executive management at Atmos Energy to support a healthy balance sheet?
Yes.
And if the commission were to find a different equity ratio was appropriate for setting rates, would that be substituting their judgment for that of management at Atmos Energy?
I believe it would.
Okay, and just one quick thing on the cash working capital. I don't know that you that it was clear from the questions. Is Atmos Energy espousing the use of the detailed leak lag study as the appropriate methodology going forward?
No, that we did it to comply with the statute, as I had in my opening summary, but that was the only reason. The 1/8 method that's currently articulated in the stable rate tariff is what we would continue to use going forward,
And-
is what
and-
we're advocating for.
And is that just another example of how formula rate making streamline this process and reduces controversy?
Yes.
Okay, no further questions.
Thank you. Quick question on the next, that's all for the witness?
Okay.
Everybody through? Okay, you may be excused. Thank you for your testimony. On the next witness we're going to call, can we get, is there going to be cross on that one? I mean, I'm not trying to cut anything off, but if we can get one more in before lunch.
We don't know who they're calling.
Who y'all calling? Is on the list?
Dylan.
Dylan DeSantis.
There's cross.
Y'all don't have any questions for him?
Yes.
We do.
Okay.
Okay.
I'll tell you what, we will, with that in mind, let's go ahead and break for lunch. That way we don't get half before lunch and half after lunch. We'll break for lunch for an hour. So it is 11:45. We'll come back at 12:45. Everybody good with it?